What is up, everybody? Logan here again, joined by Vance again from the Discord, and this is an update on our small account challenge. We went 3 for 3 this week. We actually didn't start trading until Tuesday. I'm pretty sure it was the first trade. It was either Tuesday or Wednesday where we put one on. We didn't risk more than $900 at a time. Like I said, with this challenge, we're going to try to limit our risk exposure as far as capital at risk, try to slowly stack this account up. And 100% win rate so far, fantastic. We did add a swing trade for Tuesday because the market's closed Monday. So we'll get into that a little bit here. But I'm really excited with the challenge so far. And Vance and I have been talking back and forth, doing a lot of research, getting more data. But I really appreciate you coming back on today, Vance, for this video.
Not a problem. Glad to be here. So basically, as you can see, we ended the week up 2%. Our goal was 4%, but this week was incredibly volatile, incredibly red. Second week in a row like that. So we wanted to make sure that our scaling was a little bit lower, because I'd rather, go a little bit heavier on weeks where it just wasn't as crazy. There was actually some news today that plummeted the market. I was expecting today to be pretty green, so that was an interesting turn. But like you said, our trades were all safe this week. We had a weekly swing trade, and we kind of stacked on that to build on it over the course of the week. And we'll definitely go into a similar type trades going forward. Just to show you, we did, like I said, we made $101.11. That is after fees and commissions. We're not going to cheat like a lot of places might do and give you a fictitious number. We pay fees, we pay commissions. We're going to take that out of our profits and we're going to add it into our losses, so we can give you a realistic number to look at. So the trades for the week that we put on 2 put credit spreads. We actually took the 386, 384 on SPY. We actually added on to that in the middle of the week on the 31st, and then we condored that same day, which brought in some money. We took an iron condor going into next week that will expire on Tuesday. The expected move was really high this afternoon for SPY going into Tuesday, like almost 5 points on the expected move. So that's a lot of volatility there that we can capture. So we decided that we were going to take a nice iron condor going into that, and we brought in a 51-cent credit. And the nice thing about that is that one of two things is going to really happen on Tuesday. The market's either going to shoot up in one direction, and we can close the whole thing for basically no loss, which is nice. Or if the market doesn't really make a big move, right, by probably 10 or 11 o'clock, that'll be at 50%. We can close it for a $51 gain. In both contracts, we figure take 50%. Yeah. Or if the market really, really decides it just wants to sit there at that center level, we could, let it stay on and bring home the whole $100. So, we'll make a risk assessment on Tuesday and just kind of see where things are at. But, the market's at some pretty unique levels right now. So I think actually from where we're at, we might actually do some consolidation on Tuesday until it decides where it wants to go.
Yeah, 100%. I agree with that. And the other thing too is looking at the risk profile we took on this one, which is just 2 contracts on the Iron Condor, just so that we can continue to not overexpose ourselves.
Yep.
Because you just never know, right? In this market.
Absolutely.
You can do your best, but you just never really know because, and I like how, like we said, we're including the fees and commissions. I know they're a little different for everybody based on your platform, but this is just based on the one that we're tracking specifically for this. To give you guys information with. So we still have $4,500 to work with, right? Right now we're risking $600 in collateral, but we did receive a credit as well. So honestly, less than that. So yeah, really good, looking good into Tuesday. So this is going to be a shorter week, but we're still going to try to hit our goal at 4% and just keep stacking the gains, because Vance and I were talking about this earlier, for any of you guys who are listening right now, that, wow, that would be nuts, right? Like doubling an account, most people get 10% a year, right? That's the average investment return. just buying and holding the S&P. So they think that things like this aren't able to happen.
Yep.
Okay. Like I get it. Right. But even this week alone, like 2% on the account in a week means that even if we took this much of a conservative trade, that after 5 weeks, we would hit what people average in a year. I'm really going to show you guys step to finish, like that this can be done. And this is a 3-month long challenge. So
Yep.
you put that out there too for.
And I'm going to comment on that. And this is honestly something that when we do the seminars, this is something that we're going to talk about because there's a lot of information to go into with that.
Oh, yeah.
But I mean, basically, part of that issue is that there's this idea and concept of how to trade and what's a safe way to trade and what's proper position sizing. And there's a lot of differing theories on it, right? And there's a lot of differing ideas of just how to put money into the market. And I'm not going to sit here and say that one way is wrong, one way is right. But, you know, there's a lot of people out there that they want to trade super conservatively because they've been taught, oh, you should never enter more than 1% of your of a trade in terms of risk. And there's a lot of information that unfortunately it's good information, but it's based on a certain trade type, right? So, you know, they're saying, hey, don't spend more than X amount of money buying a stock. And when you're looking for pennies in the dollar, and that's how we scalp trades, or we do this, we do that. There's so many different ways to trade and so many different ways to make money, right? That people hear little tidbits from talking heads or from whoever, and they assume that that's just the way they have to trade everything across the board. And it's a flaw in logic. It's a flaw in judgment, right? We're not sitting here saying if you have a $5,000 account, you want to go in every trade with $5,000. That is just a recipe for disaster. Absolutely. We would never advocate that. But do I have an issue with half of my account or half of a $5,000 account being allocated at one time to make trade money? No, of course not, right? Because if you have solid stop losses, right, you really don't have the totality of the account at risk. Yeah, there's some slippage. You may lose more than what your stop loss that you want to lose, right? But with rolling and other defensive strategies that are out there, I promise you, you can trade and not put the entirety of your value at risk. We're not coming up with some crazy math, weird science where we're saying, you're risking $1 to make $4 or anything crazy like that. We're coming up with solid, realistic trades that have a good probability of profit and a good expectancy. And you can make, I guarantee you that you can double a $5,000 account to $10,000 in a year. Absolutely. Now, if you have $1 million account, are you going to double that to $2 million in a year? Probably not. But you could conservatively trade that account and probably make $500,000 in a year relatively safely with zero DTE. So for anybody that says it can't be done, I would argue that they either don't want to take any risk or they're trading in such odd risk-shaped trades that they're putting up so much capital risk because of fear risk, and that's something I talk about all the time, that they basically can't make any money because when they lose, it wipes out all their winners.
100%. That's where, I was getting into an issue back when I was wheeling Carnival Cruise Lines. In those $20 a share, I would have to risk $2,000 if I wanted to do the wheel just to get like 30, 40 cents on, which $30, $40 because options. But, and I'd just sit in that trade for a week to collect. It's like, what if I got assigned and then the stock went to $8? Then it's what am I can't sell covered calls for more than $12, and even if it exceeds that, then I'm going to be down all time on that strategy. So we were talking about that earlier and how, like, especially in this market, right? We're in that bear market. You just have to be nimble and you have to be quick. So we continue to be nimble, quick, where our DTEs aren't very long. Like we're trading, I think 3 days, 4 days is our maximum.
Yep. The average right now is 2.3.
Yeah, 2.3. Perfect. Average days in a trade. It's 2.3 on our first 3. And it's like, honestly, that might drop. That might drop to 2. I bet it kind of stays around 2.3. Of course, we need more data, but just because the market is so volatile, even like what payroll did this morning when those numbers came out, right, made the market move. And it's just really interesting to see in this time. So even throughout this really tough market, as like the small account challenge becomes my main priority with 0 DTE, of course, too. I've been doing really good with that. That's just, I'm excited to see where we continue to grow with this, because even 2% after a week like this, with not even risking more than at 1.18% of the account, like, and that was at one point, and those trades already had a 96% chance of probability or something.
Right.
I mean, we're already stacking the wins. So I think next week will be honestly better, even though it's a shorter week, and we'll continue to see what we can do. Just getting in and out, big time.
Absolutely. Absolutely. And it's funny that you bring up the wheel, right? Because that's something we were talking about earlier today. And what's funny about the wheel, right? In terms of, again, I don't want to say one person's strategy is right or wrong, but, there's an example of something where, the wheel is extremely popular right now. It is, in my opinion, a clickbait strategy. Everybody talks about it. And when you think about it, right, like you said, you're going to, even using a relatively inexpensive stock, a $20 stock is still a $2,000 investment. Even if you use margin, right? Even if you use margin and they give you 50%, yep, right? Some will give you 10, but volatile stocks, it's usually 50, right? The problem is that you still have to maintain cash reserves in your account. So you still, even though you're on margin and they only take out $1,000, they still effectively require you to have the other $1,000 in your account. And if you go below certain margins, right, they're going to margin call you. So you're still basically risking $2,000 to make, 1%, $20, maybe $30, maybe 1.5%. Like,
brutal.
That's why there's this mentality. It's because of trading like that. That's why there's this mentality that you cannot make the money in an account, because people are so used to hearing about these types of, I'm going to be honest, like I have a very low opinion of the wheel, right? It's a silly trade, right? If I told you that you were going to put up $100 to make $1, right? Most people would look at me like, I'm not going to do that. A bank would certainly tell you they're not going to do that, right? A bank wants to make $10 on that $100, right? So, you're basically making a trade that underperforms the S&P 500. Why are you even taking that trade to begin with? That has, like you said, a considerable drawdown risk. And there have been a couple of YouTubers that are quite prolific, right, that have taken very bad wheel trades on their channel and have lost a lot of money. And I mean, it's the wheel is a good strategy in a strong bull market when everything is going up, and you can place a put credit spread on an individual underlying, and likely it will continue to go up or stay flat. But in a bear market where you have to assume that any stock is potentially going to drop, especially if you're putting the wheel on stocks that are at historical highs. Like, there's a lot of technical analysis that you go into running the wheel that people don't do.
Yeah, it's been really crazy lately. There's a lot of just so many strategies out there, but I'm loving the way we started this so far.
Absolutely.
And one thing I wanted to talk about too is Vance and I have been talking about doing monthly seminars. If you guys are interested, leave a comment below. Us going in depth, right? 0 DTEs, a couple other strategies, a couple other things where we just go live for an hour. You guys sign up and you basically get to ask questions in the chat as we show you like more in-depth analysis, even more in depth than I get on my channel, just so that you guys can get a better idea of how to construct these trades by yourself. And my goal is, after you guys have had like 2 to 3 seminars, that you're trading really close to how we are, and just it's a big mindset thing, but also it's a skill thing. Like, some people just don't have the information that you and I have. And I think it's really cool that we'll be able to share that. And, of course, leave a comment below if you guys would be interested in that. And we'll get everything going to where we can hopefully have one ready to go by the end of the month. But yeah, I'm really excited. I'm loving this challenge. And I think we touched on everything we wanted to touch on in this one.
I think so.
Awesome. Well, that's going to be everything for us. If you guys want to come follow along with this, come check out the Discord. The link's down below if you guys want to trade with us. I'll tell you guys why I put the trade on. Vance calls them out. We talk about it. And then you guys can reap the rewards with us. So I appreciate that. Make sure you guys leave a like, comment below, and subscribe on this video, as it helps the channel out greatly. And Vance and I will see you guys in the next small account challenge.